Have you ever wondered how high sand might go in the upcoming 2025 bullish market? If so, you're in luck because today I'm going to be sharing my sand price prediction for 2025. As I get into today's video, if you do find it useful and informative, smash that like button, subscribe if you're new, and let's jump right down into the charts and take a look at what's going on with sand. So here we have sand paired up with USDT. We're on the 1-day Binance chart here, and we are going to use a couple of tools to help us understand the market structure and where we kind of think, sand could be heading in the upcoming 2025 bullish market. Now, for this, we are going to use two tools. The first tool is going to be a Fibonacci retracement tool. This is kind of like your basic kind of go-to technical analysis tool. If you're not familiar, this basically works based on kind of psychology and kind of market trends to a degree. It also obviously called Fibonacci for Fibonacci sequencing, and these numbers obviously have a kind of relationship to how people are emotionally going to react to the market. People will feel something is overbought, oversold. Traders will look at this and expect to find resistances and support. This is kind of like a critical tool. Now, I have customized this a little bit. For starters, I removed all the horrible colors, reds, greens, yellows, etc., and replaced them with kind of just white standard stuff so it's easy to see on the chart. I then, of course, customized the numbers as well to focus on the Fibonacci numbers that work with Elliott waves, which is the other tool that I'm going to use. So we run from 0, 0.236, 0.382, 0.5, 0.618, 0.786, 1, 1.618, 1.382, 1.236, 0.702, and 0.882, and occasionally I have this one on as well, a 1.272. Turn it off when I don't need it. Okay, so feel free to pause this and copy these down if you want. The main setting that we want to kind of focus on is this one right down here, fib levels based on log scale. Okay, as you can kind of see the Fibonacci in the background there, you can see that if this is actually turned off by default, by the way. When you turn this on, you get the correct setup if you are using a logarithmic chart like I am. If I am not, this is what it's going to look like, and it's going to look like you have incorrect Fibonacci sequencing, okay, because it's not based on log scale, but your chart is. Okay, if your chart is not on logarithmic, not a problem, but let's face it, most people trading cryptocurrency have their charts on logarithmic, so you can actually see what's going on. So I have that turned on. It's one of the most important settings. Now, if I cancel out of here, this is what a chart looks like when your logarithmic setting is not on. It looks like this. It becomes very much unmanageable. Okay, so logarithmic on, off, on, off, on. Okay, so that's your first tool, basically Fibonacci retracements and extensions, okay? That's the first thing. The next thing we use is Elliott wave. Now, Elliott wave can be very confusing. It consists of 5-wave movements, 3-wave movements. You've got ABCs, you've got WXYs, right? It sounds overly complicated, and there's lots and lots of rules. It is a complicated subject. There are, of course, people who don't believe in Elliott wave. They think that it's just a theory and it hasn't really been proven, but actually, if you back test it, it's 100% accurate because it has a rule for everything. The problem isn't Elliott wave. The problem is the analyst isn't actually drawing it correctly. They're not paying attention to the rules. Maybe their own biases come in. That's the problem, not Elliott wave itself. Elliott wave is an insanely predictive tool. I have an 80 to 90% success rate with Elliott wave, right? And you don't get that if you kind of just kind of pick and choose what you want to believe in. Okay, so follow the rules in the black and white way, and it's really, really predictive. Okay, so those are the two things we're going to use. We don't need a bunch of indicators. We don't need, your EMAs, although they're on the chart here. We don't need them. You don't need your MACDs. You don't need your stochastics, your relative strength index. You don't need any of that. You only need really a Fibonacci tool and some Elliott wave, and that's it. You can be very predictive over it. Very simple, right? But it's complicated if you are starting out. I did put together a whole course on Elliott wave. You can check it out at 𝗕𝗘𝗪𝗏𝗏𝑐𝑜m. It's also linked in a description below. There's usually an offer code or something like that. Join us in the free Discord if you want to know a little bit more about it as well. Okay, so now we've got the basics down. Let's go ahead and take a look at this and kind of try to figure out what happened in the previous bullish market and whether or not history is giving itself up to repeat, right? And to do that, we are going to take a look at the structures here using Elliott wave to start with, right? So we have data running from August 20th up to the peak of November 2021. This was a pretty explosive move for sand, and I know a lot of people kind of say that sand is a dead project. I still see stuff going on there. It's not major stuff. It is relatively expensive to kind of build upon, but in terms of like like, metaverse games and stuff, I still think Sandbox is the kind of one that is more than likely going to get traction and kind of do really well. You can take a look at other networks, or like, Decentraland, for example, where I think actually it's more of like a barren landscape than anything else going on. But Sandbox, love it or hate it, doesn't really matter to me. From a speculative investment point of view, we can kind of see what behaviors are going on. Now, in the previous bullish market, we saw 101,000% gains on Sand. It was absolutely astronomical. Let's put that into perspective, right? Bitcoin did 2,000%. And I suspect that Bitcoin's going to get even less gains in this coming bull market than what we had seen previously, right? You see diminishing gains over time. So, Bitcoin, for example, 50,000% gains, 20,000% gains, 5,000% gains, 2,000% gains, right? You can see that the gains just lower and lower and lower. So to see 100,000%, it's quite abnormal within crypto. I mean, take other projects, you see 17,000, you might have seen 45,000. Outside of like the meme coin bullshit, it's really hard to find a project with solid fundamentals that have performed this well. There are really a few that are really kind of trending the narratives at the time. Okay, so Axie Infinity did 160 odd percent, 165, 166%, 166,000%. You've got Sand here doing 100,000%, right? So you can see significant gains. Do I suspect that we're going to do another 100,000%? No, I don't. But it did very well nonetheless. Now in this, we can see a few very interesting kind of structures. If we use the Fibonacci tool to measure this distance, and you'll notice that I'm ignoring that initial launch period there because it really doesn't give us anything to kind of go on. But this area is quite telling. Okay, so we have that measurement from our lows of the November 2020 to March of 2021. We had a correction, and then we pushed up into what we'd typically see as a finishing structure. Okay, and that finishing structure would have fallen between 1 and 123.6%, okay, or 1.236 on the fib scales. And you can see that that's exactly where the price went, okay, between $4.58 and $10.33. In fact, we had a bull market peak up here at $8.48. This is known as a zigzag pattern, which is why I pulled it out. I can see it quite clearly within there. You've actually got what we deem a double zigzag pattern. You have that one right inside there, and there's one down here as well. We could argue that we could have looked at it slightly differently, but it's not a nice clean example of what I would like to show on the video. Even though we are talking about the history here, this one here is not as clean because it doesn't reach that 1-to-1 level. It kind of got rejected around the 786, but nonetheless you can kind of see double zigzag, which essentially would be noted as a kind of WXY pattern, like so. Okay, so that's kind of what happened previously. Now from that, it allows us to understand the sentiment. The sentiment was very much, we want to lock in profits, but we also want to ride it to the upside, right? So what you saw here were these kind of bursts to the upside, crawling off, burst to the upside, cooling off, burst to the upside, cooling off, burst up, cool off, burst up, cool off, burst up. Okay, so this is quite important because it tells us that there's kind of short-term narratives back in the day, right? Now, of course, things are kind of mirroring very similar kind of patterns. You can see over here, you had the burst to the upside and cooling off, right? So we should be expecting very similar behaviors to what we kind of saw previously. But of course, we're not going to be expecting 100,000%. Okay, I think that would be kind of crazy. But what we can do is use our knowledge here to assume that maybe there's actually something else more kind of bullish going on, because I still see this one performing well from a speculative investment perspective. And in terms of all of those kind of older metaverse based projects, Sandbox to me always has stood out, mainly because it kind of has that kind of Minecraft kind of esque feel to it, which, if you aren't familiar, Minecraft is the world's most popular video game, right? It's the one that sold the most amount of copies worldwide, right? Dwarfing that of, let's say, Grand Theft Auto, for example, or any other kind of big names that you can think of. It doesn't even touch how far Minecraft has gone. And because this game kind of mirrors that kind of look and feel, I think it's going to resonate with more people, specifically as we start to think about younger people who maybe grew up with Minecraft coming into Web3 and actually finding this metaverse project that kind of has that kind of look and feel about it. To me, just makes like another kind of element to why this one's more than likely going to get a lot more speculative investment coming into it. Okay, but we can see that the bear market has been very brutal, not just for Sandbox, but for many of these projects and altcoins. It was a 97.55% move to the downside, which bottomed out in August 2024. Now, from down here, it's already seen some decent gains, okay? We've had a good surge to the upside, coming in at 412%. It's definitely not a small surge to the upside. This move to the upside that we've seen so far is giving me some promising ideas about where the future could be going. It's very impulsive in the way that it's run, and we are looking for another push higher before potentially correcting. So to me, I think Sandbox is gearing up for a trend-based structural point to the upside. I'm going to go ahead and draw some rough estimates in because we need to understand what the potential is for 2025. To do this, I'm going to basically use Elliott Wave's assumptions on the wave 4 and wave 5, okay, for finishing off this first little structure. Okay, so in doing that, we can then be predictive over where we think the future could potentially be going. So in this particular space here, we're going to use a rough guide coming in. Now, this is quite an interesting potential structure of an expanding diagonal, and then we have a move up here, and I'm going to use the higher side to be conservative for this. So we hit the highs there, somewhere in that kind of range between 128 and 175, and then we're going to be looking for another correction. I'm going to draw this in approximately somewhere around here, but it could be deeper. It's just a rough guide anyway for now, and then we're going to use our measurements here to basically predict out where we think the next kind of bigger runs are going to be. So based on everything that we've kind of spoken about in terms of what we saw in the previous bullish cycle, we can see the potential rise out towards $5.14 to $8.51. And that's going to split opinions amongst people because there's definitely a narrative out there that the project is completely dead and can't be revived. I don't see that as a kind of reality. I think that this potential, or the potential, is there. I mean, you see the newsletters cropping up now as well, and kind of have been ongoing for a while from Sandbox, the stuff that's going on there. Like, I know that a lot of people will look at the 90% down and think that it's dead and you've got the ski slope going on, but actually the resurgence is very much true. This kind of mirrors very much what I saw in Cardano back in 2020 or 2019 to 2020, where you had that kind of initial kind of push to the downside, a little relief rally, and then a final bear market bottom before rallying insanely well. Okay, now obviously it's going to take a lot to get there. I'm not saying that that's going to happen overnight. This is basically only a zigzag pattern. Anything higher than the 1.618 at 1925, that's going to trigger a bigger bullish market. Okay, and that's where things can really get into some pretty hefty numbers. If we take that into kind of consideration, that would be nearly 10,000%, it would actually be 9,000% there, where we could potentially be looking at 15,000 for this entire bullish market, maybe even a little bit higher if we were to take those levels out. It could just be that we end up with this kind of $5.14 to $8.51 approximately, with a double top situation and then a complete break to the downside from there. Now, if we do gradually work our way up here, one of the things that we could be looking for, and I'm going to do something that's not inside Elliott Wave, if you're just into pattern trading, you could potentially look at this through the idea that maybe you end up with a little cup and handle pattern that plays out and gets you out to those higher levels. But again, I'm not a pattern trader really, just something that I can note within the price action there based on kind of what my expectations would be with Elliott Wave. So let me go ahead and roll this up for you so you can see, right? We have a wave 1, or an A wave, a B wave, and a C wave. That's going to be kind of where my kind of basic expectations are going to be here for Sandbox. So look for $5, something to that effect, and kind of bring us up to where we were previously. And if we can get into kind of more bullish environments, well, in which case, we might see maybe a resurgence. We have a wave 1, a wave 2, some kind of wave 3 up here at around $19, a wave 4, and then a final push to the upside. This could basically be ushering in a final big move to the upside for 2025. So I want to kind of say categorically that I wouldn't kind of expect that, but I will say that there's a lower probability of going up to those higher ranges. For me, I think for 2025, to be more kind of realistic and conservative, we'll aim somewhere between $5 and $8.50. I feel that that is going to be the most comfortable place to kind of aim when it comes to Sandbox. But of course, guys, what do you think? Let me know in the comments below. This is just my thoughts and opinions on the data in the charts as I see it. If you have found this useful and informative, smash that like button, subscribe if you're new, and if you haven't done so already, guys, check that video out right there. It's one you don't want to miss.